afternoon. You're tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, as always, I have Vinny Motiwala. Very good afternoon to you, Vinny. And let's take a look at what the markets are doing today. It looks like a very healthy start coming in for the D Street on piggyback riding on what happened in the US markets on Friday. A sharp rally, that's what US markets had staged on Friday. SGX Nifty indicated we have a good start, and that indeed is how it's transpired. Nevertheless, we are holding on to 18,600 levels, just 200 or a little over 200 points away from the record high levels of 18,888. Let's take a look at what the rest of the market structure is looking like at this point in time. If you look at Nifty Bank, tad bit of outperformance from Nifty Bank in comparison to the benchmark indices. If you look at the broader markets, it's the mid-cap index that's seeing tad bit of underperformance, 0.3% uptick coming in for mid-cap index. Small cap index trading higher by about 50%. So I beg your pardon, about 0.5%. If you look at the advance decline ratio, for now it is very much tilted in favor of the advances. Talking about the sectoral indices, is the PSU Bank Index that's among the top sectoral loser along with FMCG Index. But apart from that, rest all the sectors are in the positive territory. Nifty Auto, which hit a record high level in today's trading session, is seeing gains upwards of 1% right now, Vinny.
Absolutely. On that note, let's get started with all those stocks that are buzzing in trade either on the back of news flows or on the back of technicals. And on the technicals, today we have Sameet Chavan joining in with us from Angel Broking, while from the research team we have Amakshi as well as Ashesha joining in with us. A very good afternoon to all three of you all, and let me start as always with the first stock that is buzzing in trade. Let's talk about Tata Chemicals. Now, what is happening over here is in terms of the announcement that has come in that the company has announced a reorganization of its US operations to rationalize a number of intermediate entities, and now Tata Chemicals is creating a platform for electrochemistry solutions to create its own EV supply chain as well. So yes, we are keeping an eye out for Tata Chemicals on the back of that as well. Other than that, also Tata Chemicals met up with some of the analysts, and we have an highlight coming in from the meet as well, where the company said that they are maintaining their global market requirements of 1.5 to 2 million tons of soda ash annually. Hence, their market expects to remain in balance or in tightness as well. The company maintains higher inventory levels in the first half of FY24 to proactively mitigate the potential inventory holdups during the monsoon season, and inventory levels are expected to see a decrease in the second half of FY24. China reopening is a crucial catalyst for demand growth for the company as well. And looking ahead, soda ash market they expect is projected to maintain the balanced demand supply scenario in the medium term. Demand growth ranging from 2 to 6% is what is anticipated to outpace the supply growth, contributing to the equilibrium. This was the meet that the Tata Chemicals management had with B&K Securities, and that is why also we are seeing a focus coming in on the stock as well, Cheryl.
All right, that is the news flow surrounding Tata Chemicals. But Sameet, you also have Tata Chem on your list. No doubt the stock is seeing a very good uptick in today's trading session. But if you look at the year-to-date performance, or even for the last 1 year, the stock hasn't given that much of a return. Now it is actually at that 1,000 rupees mark. Where do you see Tata Chemicals headed from here on?
Clearly, this stock has done nothing over the past, 3 to 4 months. Today's price action since morning has been quite good. This is the first sign of revival that we are witnessing in last 3-4 months. Stock has been consorting, and today we are seeing a decisive breakout from its, multiple hurdles, 990, 995. And if you look at the volumes have risen substantially. Today's volumes are, more than 3 to 4 times of its average daily volume. So this clearly indicates that there's some sort of buying interest that has come in this particular counter. So from here on, the momentum is likely to, continue in the upward direction. 1050, 1080. These are the next levels to watch out for. And on the lower side now, 980, 970 would act as a very strong support for this particular counter.
All right, moving on, let's talk about Aether Industries, and that particular counter is in focus in today's trading session. Traded higher by about 1.8%, 1 point in time, which took the stock to the highest level since May 15. Right now, the stock has fizzled off from those elevated levels. JM Financial has actually initiated coverage on the counter with a buy rating and a target for around 1,080 rupees per share, citing its relatively lower scale along with its strong research and development backbone. They're estimating the Aether Industries revenue compound annual growth rate, that's that CAGR of 36% over FY 23-26 on growth in its large scale and contract manufacturing verticals. They are also expecting an EBITDA CAGR of about 38%, that is supported by process synergies, lower power costs and launch of several high-end products. So you have JM Financial initiating a buy coverage with a buy rating, target of 1,080 rupees per share. The stock right now is doing absolutely nothing, trading flat with a positive bias.
Let's move on and talk about Indorama Synthetics. Kamakshi, why have you picked out this one? What's the news flow here today?
Well, Vinny, the stock is soaring away in the trading session today. When we look at the news flow that is impacting the company has announced that one of its wholly owned subsidiary, Indorama Yarns Private Limited, they have successfully started commercial production of bottle-grade PET resins, and this has happened from its newly constructed solid-state polymerization, that is the SSP plant in Nagpur on June 2nd, 2023. So given this positive news flow, we are seeing a sharp up move come in on this counter. As you can see, the stock is trading near the day's highest point, up nearly 17%.
All right, that is Indorama Steel soaring in trade, 17% uptake for that particular counter. Shesha, why is Hindalco in focus today?
Well, yes, this one is in focus on the back of a brokerage note. JP Morgan, in fact, has come out with a note where they are maintaining their overweight stance on the stock, and they've given a target price of 490 rupees per share. The stock currently trades at 419 odd levels, indicating a 17% upside from the current market price that JP Morgan is betting on. They say that Novelis can contract from new plant is a big positive for the stock. Novelis has broadly contracted out the entire beverage can manufacturing facility at its upcoming plant, and near-term earnings are strong for Hindalco in their opinion. They also say that they continue to see Hindalco to trade in the wide range of 350 to 500 rupees per share mark over the next 1 to 2 years, given the high capex that the company has decided to entail. In fact, they believe that at the current levels, the risk reward is pretty favorable, and hence they are maintaining their overweight stance on the stock with a target price of 490. The stock has fizzled out. It was trading in the green earlier in the day, but now sitting with a little bit of negative bias.
And talk about a defense name on the charts, and Sameet, you picked out BL for us today. Also, when I'm looking at it, it's buzzing in trade. Last 1 week also, it's seen a decent up move and has managed to keep that momentum going on for a long period of time in terms of the defense space. How much more upside is actually left for BEL, and should one actually look to book out the profits now?
One should not be in a hurry to booking out profits, because recently stock has been a steady mover since the early part of April. Stock has been rallying on a sustainable basis from 90 to 117 now. Importantly, in this leg of the rally, stock has managed to surpass its previous highs. So 115 was the previous high. It has broken up from those levels. Volume activity has been quite good, so that clearly provides some sort of credence to the move. And on a technical point of view, stock has now given a breakout, and so that unfolds the next leg of the rally. So from here on, will not be surprised to see this stock even extending this move. 125 in the near term, and if you have to take slightly broader view, 135, 140 clearly looks on card. So one shouldn't be in a hurry to booking out profit. In fact, in case of any depth probably to 110, 105, it would be an opportunity to add on or go long, keeping a stop loss somewhere around 100. So 100 seems to be a very strong support in the near term. So any depth towards 105, 110 would make it a good risk to reward candidate.
Okay, let's move on and then talk about IPCA Labs. Now, IPCA Labs is in focus. Why? Because the Income Tax Department has actually carried out some survey proceedings at the company's offices in Mumbai as well as Sikkim, and this is the manufacturing plant, and this was between the 30th of May to 3rd of June 2023. And obviously the company has said that they are cooperating with that and giving the needful as whatever is required today. So keeping an eye out on that. The stock has surely recovered during the day's time, and as of now trading with gains of 0.8% on trade share.
All right, moving on, let's talk about APL Apollo Tubes, and this particular counter is seeing good gains in today's trading session. At one point in time, it was trading high of about 2.2%. The analysts at Motilal believe that APL Apollo Tubes will benefit the most from government's Amrit Bharat Station scheme for railway station redevelopment, also Jal Jeevan mission to erect water tanks. For this, they cite a strong momentum in the structural tubes application in these schemes. They said that APL Apollo is the top pick in the structural tubes industry, as it expects the company to gain a larger pie in the growing market, and therefore they're maintaining a buy stance with a target of 1,490 rupees per share. Not just that, Motilal also projects revenue to EBITDA to PAT CAGR of about 15%, 35% and 40% over FY23-25. That is, the percentages are respectively to those numbers. So revenue is 15%, EBITDA is 35% and PAT CAGR of 40% by over FY23-25. So on back of that, you have APL Apollo Tubes that's seeing good uptick given the fact that Motilal is reposing faith in the counter.
Let's move on to the auto space, and on the charts, Sameet, you picked out M&M for us. What are the charts indicating now for this one? What is the run-up that we should be looking at here?
This stock is clearly on roll since morning. Recently, we witnessed a good, steady move from the lower levels after, forming a base around 1150. And today, since morning, this stock has, literally taken off. So if you look at the volume activity in the recent rally, it has been robust. So that clearly provides that, some sort of strength to the recent move. With today's price action, stock has now challenged its previous highs of, 1380, 1385. And we expect this stock to now enter an uncharted territory. So 1450, 1480, these are the next levels to watch out for within the auto space. This stock certainly looks good, and it is, among our preferred bets within this space as well. So we like M&M for a target of 1450, 1470. Any dip from current level would be a good buying opportunity, and as a trader, one should now keep a stop somewhere around 1340.
All right, moving on, Damakshi, let's talk about Wonderla. Why is this one in focus?
Well, Cheryl, the stock is gaining away in the trading session today after the company announced that the government of Tamil Nadu has granted waiver of local body tax, that is LBT, of almost 10%, and this has come in for a period of almost 10 years from the commencement of commercial operations. Now, this is, however, subject to the condition that the commercial operations for the company shall be commenced within a period of 2 years starting from June 2nd of 2023. Now, the company is expecting to commence the operation of the Chennai project as earliest as a consequence, and this, in fact, if this thus goes through, it will be very positive for the business of the company. So given all these positive factors, Wonderla Holidays is in focus. As you can see, the stock is up and away in the trading session today, up nearly 4.5%.
And Sameet, you picked out one more defense name coming in, and that is Hindustan Aeronautics, or HAL as we know it as. Similar charts to BAL, what is the expectation here?
So all these counters moving in tandem. In fact, HL has been one of the outperforming counters within this space. It did not correct much, in the recent price-wise correction in the broader market. Stock has been quite steady, and in last 1.5 months, stock has now resumed its upward trajectory. So we expect this, uncharted territory to continue, wherein as far as levels are concerned, one can project immediate levels would be around 3450 to 3600. Overall chart structure looks quite encouraging, and any depth probably towards 3200, 3100 would be seen as an important support level. So any depth towards those levels can be used as a buying opportunity.
All right, moving on, let's talk about Eicher Motors. Shesha, why is this one in the spotlight?
Well, yes, JP Morgan met with the management of Eicher Motors, and on the back of that, they've come out with a note where they say that the management of Eicher Motors is cautiously optimistic as far as the demand is concerned, and that they do not see any production constraints at the moment. Their recent offering Hunter continues to see a good response from customers. In fact, 35% of the buyers of this particular new offering are under 25 years of age. They say that raw material inflation is largely expected to be flat going forward, and the cost structure is the same for domestic as well as exports market. In fact, as far as the export market is concerned, the management did highlight that it continues to be a focus area for the company, and Eicher is looking to grow the exports market and cater to high price points as well. Eicher is seeing the impact of a weak macroeconomic environment in international markets, but US demand continues to be stable. So on the back of these takeaways that have come in, Eicher Motors is in focus today.
We're keeping an eye out on Eicher Motors. But we do have Indigo Paints that is in focus because they met with Nuvama, and there were some key highlights coming in there where in the report Nuvama is highlighting that the management is expecting the industry to grow quite fast in FY24. They believe that the sales force has increased by 40% and the new loyalty program for the paint contractors has started, while the higher focus in terms of expansion in larger towns is also something that is keeping them abuzz. 51% of stake in Apple Chemai opens access to waterproofing technology, as well as the company will expand pan-India B2B as well as enter B2C segments under the Indigo brand as well. Differentiated products to outdo the rest of the portfolio, and keeping an eye out on Indigo Paints today, trading with gains of almost 1.5%.
All right, Sameet, let's talk about L&T. Last 1 year, 34% uptick, or rather over 37% uptick coming in for this cap goods major. Today also good strength coming in the counter. Not too far away from is life highs. Where do you see L&T headed? Do you think that in the next 1 month or 2 months or so, it will actually form a new record high?
Looks like this stock did not participate in the recent rally that the broader market saw. So from here on, after forming a strong base around 2180, 2200, since morning we are seeing good buying interest in this counter. So stock is poised for retesting its previous size, 2400, 2420. So that would be a positional target. So as a trader, one can keep a stop loss around 2220. Immediate target would be around 2350, but with a slightly broader view, yes, 2400, and then all-time highs would be on card. So overall, the bias remains positive. Stock has already formed a strong base, and from here on, it is likely to participate in the next leg of the rally.
All right, let's move on. Let's talk about Greaves Cotton then, and that particular counter is in focus in today's trading session. They've said that their NBFC arm has introduced EV-Fin, which is a platform for electric vehicle financing and much more. Like I said, they said that Greaves Finance has introduced a financial platform known as EV-Fin for electric vehicle financing and beyond. The company management has said the EV-Fin is India's first consumer finance technology platform fully dedicated to electric mobility and other sustainable solutions. So this is the quote coming in from the CEO of Greaves Finance. And on back of this new launch coming in from the NBFC arm, especially for the EV industry, you can see Greaves Cotton soaring 4% in trade today.
Okay, let's move on and talk about Axis Bank on the charts, Sameet. What are you expecting from this private bank? Last 1 year, almost 40% returns is what we are seeing. What is the upside that we should see, and what is the target price?
See, heavyweight HDFC Bank has been sulking, since last few days. But Axis Bank is the one stock, that has been participating heavily since morning. It has already surpassed its recent highs of 940. And considering the overall momentum, will not be surprised to see this stock, challenging its previous highs of 970, 972 in next couple of days. So overall, the structure is quite, sturdy. And from here on, if Bank Nifty has to test 44,500 or 45,000, we expect Axis Bank to lead from the front. And as I said, 970, 75, these are the next levels to watch out for.
All right, moving on then. Indigo Remedies, Vamakshi, why is this in the spotlight today?
Well, Sharon, this stock is reeling under pressure today after the company announced that they have received an OAI, that is an official action indicated status by the US FDA for its second Goa plant. The OAI status was not anticipated. It definitely came in as a surprise for the company because the 4 observations that the US FDA had noted were not complex in nature. OAI status means that the existing products will continue to be manufactured, but it is the new approvals that will get stalled. Now let's understand the impact of this development on the company. The US growth could in fact take a hit because the company had guided for nearly 30% growth in FY24, but it is the new approvals, as I mentioned, that would get stalled. In fact, company was expecting around 3 to 4 approvals in FY24 itself, and this particular plant, when we look at the US sales, they account for nearly 16% of the revenue, and 70% of these US sales actually coming from this plant. So largely it is a net negative news flow for Indigo Remedies, and that is the reason why the stock is declining in trade today. As you can see, the stock is trading lower by almost 5%.
Let's keep it with the pharma space because we spoke to Aman Chauhan of Abacus Asset Manager LLP, and what he's advising to be very selective in the pharma space and within the sector prefers domestic focused pharma players. Let's go cross and listen in.
To be very selective in pharma, but whichever companies which impacted because of higher API prices or higher raw materials coming in from China, now the China supplies are resumed, so these companies are getting those margins back, and hence one can look at this sector also. We are adding to the pharma exposure, and as I mentioned, we are looking at companies which are benefiting from the lower raw material coming in. So that is one space that we are pretty positive, and the domestic pharma space that is doing steadily well. So these are the two sub-segments within the pharma space that we are currently focused on.
All right, let's move on. And Sameet, looks like you really like the entire defense pack quite a lot. Also, should I even term it as cap goods space? BHEL, where you see this one headed, similar chart pattern that of L&T or even HAL or BEL for the matter of fact?
Clearly, the entire space is buzzing. BHEL, which has been quite off late, stock has given a decisive breakout from its, recent hurdles of 82, 83. So from here on, we expect at least a move towards 87.50 in next couple of days. But once this stock surpasses 87.50, 88 on a closing basis, then this would unfold, next leg of the rally. Because on weekly or monthly time frame chart, we would see the breakout happening beyond 87.50, 88 mark. So then, the rally towards 95 or even 3-digit mark cannot be rolled out. But as of now, at least with a momentum perspective, 87.50, 88 looks on card. As a trader, 83 seems to have very strong support, so one can keep a stop loss below 83 and go long at currently.
Okay, let's move on then and talk about Escorts. Ashesha, why have you picked up this one for us today?
With the management of Escorts, and on the back of that they've come out with a report where they say that May tractor retail sales have seen a pickup on a month-on-month basis, and growth in FY24 should be driven by positive farm fundamentals. They say they expect low single-digit growth in the domestic tractor industry in FY24. As far as margins are concerned, Escorts expects to revert to 14 to 15% EBIT margin range in the agri-machinery business by FY24. A softened commodity prices and price hike in June is why they are bullish on getting back to that 14 to 15% mark as far as EBIT margins are concerned. They say Implements business is generating revenues of about 350 to 400 crores, and this is expected to ramp up going forward. Railways equipment division should also see healthy growth driven by higher government spending. So some takeaways coming in from that particular management meet, and on the back of that, the stock is holding up, sitting with gains of nearly 1%.
Okay, let's move on and talk about Mahindra Lifespaces. This one is in focus. Why? Because the company informed that Omron Healthcare will be launching an operations at the Origins by Mahindra Chennai, developed by Mahindra Industrial Park Chennai Limited. And this is a JV between Mahindra World City Developers Limited and Sumitomo Corporation of Japan as well. Now, furthermore, obviously, Omron Healthcare will set up the factory to manufacture blood pressure monitors. And this is going to be, obviously, like I mentioned, in Mahindra Lifespaces Developers Industrial Park in Chennai. Omron Healthcare factory will be built over 6.02 acres and will be used to manufacturing the blood pressure monitors and supplying mainly to the domestic market is what it's highlighting. Mahindra Lifespaces, Lifespace Developers is into real estate as well as industrial park segment as well. The company has developed a footprint spans over 33.55 million square foot of completed and ongoing forthcoming residential projects across 7 Indian cities as well. Let's keep an eye out on this one. On the back of this update, we're seeing that Mahindra Lifespace is up 1.9%, almost 2% in trade as of now, Sharon.
All right, moving on, let's put the spotlight on Ashok Leyland. And why is that? Because BPCL and Ashok Leyland together have initiated a pilot program to test effectiveness of the ED7, which is diesel blended with 7% ethanol fuel. So on back of this particular pilot program that they are doing in coordination with BPCL, you can see Ashok Leyland holding on to very good gains of about 2.4% as we speak today.
Okay, and like we spoke to Aman Chavan before, we spoke to him about the financial sectors. Which other sectors does he think will perform well as well? Let's go across and listen in.
At the current juncture, financials are still looking good. Financials continue to do well. both the credit cycle as well as the growth cycle is favorable for them, and now with a view that rates are soon going to start coming down, even NBFCs will start to look interesting. So there is already a trade which is happening where people have now started to look at NBFCs versus banks. So both the private banking space as well as the NBFC space is now looking good. Wherever there is a cost inflation pressure during COVID or post-COVID, those sectors are now coming back. Say for example cement, now coal prices are off, freight prices are off, so cement is starting to look good, demand is expected to pick up.
All right, so that's a view coming in from Aman Chauhan. But on that note, we slip into a break on this edition of Market Fatafat. When we come back, we will get you all the stocks buzzing in trade, so don't go anywhere.